Hello, everyone. This is Travis the Trader coming back to you live on Wednesday. This is September the 11th. I'm sure many of you have seen it was some type of a report, inflation report that came out this morning. I believe it was before the market opened, showed that inflation rose. I think it was 0.3%, and this excluded food and gas and some other items. But some of my subscribers, some of my viewers have asked me about how does this impact the bond market? Does it impact the bond market? And the particular bond I wanted to focus on, or the bond futures that I wanted to focus on, was forward slash ZB. ZB is the 30-year Treasury bond. These are the 30-year Treasury bond futures. And so I guess, based on this report that came out, it would appear that we'll get a cut, but not as big of a cut. And again, feel free to comment and saying, who knows, what's going to happen, or maybe they're still going to lower the rates by 50 basis points. Maybe it's just 25. I don't, you know what? I really don't know. I really don't know. I can only tell you from what it is that I'm seeing right now and what are some of the best ways to trade this information. So if we look at forward slash ZB, and I've mentioned this before in many of my other videos, in many of my other presentations, this is a really, really big boy contract. One contract I think is $100,000. So you're looking at a notional of about $125,000 a contract. That's a lot. And so and by the way, this is a great product. I think the liquidity is actually pretty good. I think for those of you who are looking to get into this, I've traded this naked. I've traded strangles. I've traded naked puts. I've even gone as to a naked call at times. And my suggestion is, instead of going big, maybe go small. Go small with some type of a defined risk trade, so that you have a better feel, a better understanding of how the 30-year bond trades, how it moves. If we just go, let's just do an example here. If we go to 44 days out, and the IV rank right now is 22, it's okay, it's not bad. But if we were just to sell, let's say, like a naked put at the 123 strike, again, it's not bad. $625. You're looking at profit. You're putting up about $2,600. And that could be good depending upon your account size. If you just wanted to define risk, maybe you buy the wing, you're looking at about $187 and putting up about $300 cash buying power. So that's a defined risk. That's a put spread. It's really entirely up to you as to what you want to do. I do strongly recommend bonds because, again, it's a way of further diversifying one's portfolio, and it just keeps you aware of what's happening in the overall markets, especially if you want to call it with the interest rates or interest rate futures. This gives a good measure as to what's happening, because we know the markets are forward looking. But for those of you who may want something a little less intense, there's TLT, and that's an ETF. This is the 20-year Treasury bond ETF. Many people correlate it to the 30-year bond futures. I don't really see how that is. If one is 20 years, the other one's 30, but TLT is the ETF. So if those of you who are interested in not the futures, but just want the stock, it's okay. I think you get more bang for your buck. I think the futures are more efficient, I'd say cost efficient, than using TLT. TLT, again, not a whole lot of great credit, not a whole lot of great premium. You're putting up a lot, you're putting almost $1,900 to make 100 on this naked put at a 36 delta. Again, it's entirely up to you what you want to do. I'm just here to give you some of the different investment vehicles that you are able to use in order to give you that much more ideas, ways of generating more ideas for your account when it comes to interest rates, when it comes to interest rate futures. The other thing I was going to recommend or suggest, but here the volume really is nothing, and I don't even think there's any options on them. No, there aren't. This is a new product that came out, I believe, from the and correct me if I'm wrong, I think it's the Mercantile Exchange, or it could be the option, the SIBO, the Board of Options Exchange. This is a 30, this is forward slash 30Y. And this is the micro 30 yield futures, where it's actually trades based on yield. Unlike ZB, where if the price goes up, the yield goes down. Here it's the yield goes up, the yield goes up. So you're basically trading the yield. But as you can see, not a lot of volume here. It's not something I would recommend. At this point, I would, again, if you're looking to trade interest rate futures, your best bang for your buck, most cost efficient way of going about it is forward slash ZB. But again, please, I don't want anyone here to get burned, and I'm not here to advise in any way. But the best way to just start with a product like this, because it is a big boy product, would be to sell a defined risk trade, sell a call spread or a put spread, or if you're delta neutral for that matter, just do an iron condor and recognize the fact that this can move, and when it does, it can shake things up quite a bit. Again, any of you have questions on this, please, I look forward to your comments in the comment section. If you found value, please give me a like. Please hit the subscribe button. I'm always looking to put out new, different types of videos to help you, again, not just to become better traders, better investors, but also better decision makers as well. I look forward to seeing everyone at the next video.